the virus to spread sort of without any bounds.
What do we know, Madison, about where China is when it comes to developing some sort of rival to what we have available to us, the mRNA vaccines from Pfizer, BioNTech, Moderna, and more? I mean, is this something they're working on? What do we know?
I think that there was recently an inhaled vaccine that was like an inhalable vaccine that was approved in China. But I think because infection rates have been so, controlled there, it's hard to sort of know what's going to happen in terms of protection measures with the vaccines that they do have when COVID is allowed to just spread. And it's hard to know, I think, what is happening right now with vaccine developments, because the focus has been more on mitigation measures like lockdowns and quarantines and testing requirements.
Madison, this story is so important because, right, we talk about U.S., the world's largest economy, China, the second largest economy. So what happens in China impacts certainly global economic growth. But I do wonder, in terms of the strain, it's funny, I was listening to Lisa Abramowitz earlier on surveillance about, even Tim and I, we fended off the virus for a couple of years, and then Omicron just got us. And
got everyone.
It just got everybody. The strain that China's going to be dealing with, it is a strain of Omicron, but my understanding is that it's milder than previous forms. That might be a godsend for China.
Yeah, that's a good point. The strains that are circulating now in the U.S., we see BQ1, BQ1.1. In some other countries, it's XBB. And all of these strains are more transmissible and, have shown a better ability to sidestep the protection that we have from previous infections, from the mRNA vaccines. But the variants of Omicron that are circulating now are also more mild in terms of, the disease that they cause. Mm-hmm. They're less lethal than the variants that we were seeing in the original strain of Omicron, or not Omicron, of COVID that we were seeing early on in the pandemic, and Delta. And so that is potentially, yes, a good thing, is that they won't be, hopefully, as deadly. But with little immune protection from over the last few years, it's still going to be making people quite sick.
What about the fact that the folks there are so used to being in situations where they're on lockdown, wearing masks and sort of mitigating the virus, at least without being around one another? Is that going to help at all?
Yeah, possibly. I think that is something that could help if people continue masking or just doing things that make them feel more comfortable, and the things that they know work to help spread, stop the spread of the disease. If they aren't feeling sick, then not socializing with other people or going into work. But this is something obviously that people wanted, protesting the COVID zero policies. But it's happening fast now, and I think that there could be some fear and some confusion now as things change so quickly.
Yeah, I do feel like, Madison, a case of whiplash to some extent, as we've been following China, which seems so adamant, and President Xi saying, nope, COVID zero, but obviously that has changed following those protests, really showed that the Chinese populace can change the regime in some way, or at least impact the regime. Having said that, I do wonder about how much we can trust information coming out of China. What's the conversations you guys on the health team here at Bloomberg are having about either the data points when it comes to COVID cases or just anything that's COVID related? What's the thinking about the transparency and trust of the data points?
Yeah, I think that's something that countries all over the world are struggling with right now, is data and really having a clear idea of what's going on. And I think with China, it's no different. As these removals of testing and things, requirements are being lifted, we're also seeing at the same time a drop in case numbers. And so it's hard to know whether or not that data is accurate, because we're not testing as much. And so it'll be a little bit difficult to know what's going on from a data perspective, I think. Like it was in the US when there was a switch to at-home testing, and we weren't really to know, exactly what was going on.
Well, and I think in some cases we'll watch those economic data points too. That will give us some indication if people aren't working and the economic output or trade isn't there. Madison, thanks so much. Good deep dive on what's going on when it comes to China and COVID and its COVID zero policy. Madison Muller, she's health reporter at Bloomberg News, joining us via Zoom in New York City. I think this is really one of the most important stories right now as we look at the global economy.
Yeah, I agree. And, it's unclear. We know what the economic impact is from COVID zero, and we've seen what companies like Tesla and Apple and other multinationals have done when they've been operating there. But what we don't know is the economic impact of hospitals being overwhelmed.
Right, exactly. And maybe a fear factor as numbers start to surge. I don't know how you were, but I certainly was during COVID. I mean, and obviously we were at a different place. We know a lot more about the virus and then the impact, but I felt like when I didn't know, I was terrified to go anywhere.
Yeah, in the beginning, I was too.
Like, didn't want to be
We moved to the woods.
You did move to the woods. We didn't quite move to the woods, but we're in our own little bunker in our home outside of New York City. All right, you are listening and watching Bloomberg Business Week. I'm Carol Masser, along with Tim Stanovic. Let's get an update on world and national news. For that, it's over to Nancy Lyons. She's in our D.C. newsroom. Hi, Nance.
Hey, Carol. Consumer spending continues to buoy the economy.
Consumers are looking at price tags and discounts as they do their holiday shopping. Michelle Meyer, chief economist of the MasterCard Economic Institute, said in a Bloomberg interview.
In this holiday shopping season, consumers are more promotional based. We saw this big surge of activity into the Black Friday period, particularly for things like apparel, which was really, really strong. So I think consumers are cognizant of how they're spending, where they're spending, what they're spending on.
Meyer said consumers are carefully navigating the headwinds they see, both inflation and higher borrowing costs. In Washington, Irv Chapman, Bloomberg Radio.
FTX founder Sam Bankman-Fried says he is willing to testify on Capitol Hill next week about his failed crypto exchange. In a tweet today, Bankman-Fried says he doesn't really have access to much of his data, so his testimony will be limited. Well, just when Democrats thought they had a comfortable majority with that runoff win earlier this week in Georgia, they're now hearing Senator Kyrsten Sinema of Arizona is switching from Democrat to independent. Bloomberg's Washington correspondent Joe Matthews says it may not be a deal breaker.
Kyrsten Sinema has been a real thorn in the side of a lot of Democrats in her reluctance to raise taxes, in her reluctance to end the filibuster in the Senate. And that's why a lot of the Democratic agenda, Joe Biden's agenda, like Build Back Better, never got passed. So this may not change as much as the headline might imply.
Again, Bloomberg's Joe Matthew. The Keystone Pipeline is being shut down after a huge oil leak was discovered in northern Kansas. TC Energy in Canada shut down the pipeline after more than 14,000 barrels spilled into a creek late yesterday, making it one of the largest crude oil spills in the U.S. in nearly a decade. At the World Cup, Brazil with standout Neymar was eliminated today by Croatia. No score yet in the match between Argentina and the Netherlands. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are struggling for direction. We have got NASDAQ higher, the Dow, the S&P. They are both in the red. Traders are weighing mixed economic numbers this morning. The S&P down 3, drop there of 0.1%. The Dow now lower by 92 points, down 0.3%. NASDAQ higher by 6, a gain there of 0.1%. The 10-year yield 3.56% with a 2-year at 4.31%. Gold up 0.6%, 17.99.82 cents the ounce right now on gold, while West Texas Intermediate crude lower a little change, down 0.1%, 71.35 a barrel. Well, with the PPI report behind us, Wall Street's attention now shifts to next week's Fed meeting, the final meeting of the year. Michelle Meyer is chief U.S. economist at MasterCard Economics.
Well, it seems very clear they're not done hiking. So in the upcoming meeting next week, the expectations for another 50 basis point have hikes, which makes sense. That is a slowdown in the cadence of hikes. So they're clearly starting to see some signs that their monetary policy hikes, that it's transmitting into the economy. It's making a difference. Obviously, in the housing market, it is. In some of the good sectors, you're seeing those ramifications as well.
And we've got shares of Uber and Lyft both driving higher. Uber is suing the New York City Taxi and Limousine Commission to block an increase in rates it must pay drivers. It was approved last month, calling them, quote, dramatic, unprecedented, and unsupported hikes. Right now we have got Uber shares up 1.2%. San Francisco-based Lyft up now by 3.6%. Recapping, S&P down 4, drop there of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You can feel we're waiting for that Fed meeting next week. All right, the current issue of Bloomberg Business Week. We don't have to wait for this. It's on newsstands now, on the Bloomberg Terminal and online, and it is the annual Good Business issue. In it are businesses that are taking on challenges such as fixing healthcare, tackling inequality, and saving the planet. And as it says on the cover, the businesses are basically making the impossible possible.
It includes companies such as Misfits Market, an online marketplace that started as a business that specializes in sending ugly and discarded fruits and vegetables, but it has much bigger ambitions.
They're not all ugly.
Oh, I'm the one who said that. I mean, I've been subscribing to Misfits for almost 3 years at this point. We touched on it yesterday with Business Week Solutions and Strategy senior editor Rebecca Penny, and today we've got with us the author of the story, Bloomberg Business Week contributor Andrew Zaleski, joining us via Zoom from Maryland, along with the editor of the magazine, Joel Weber. Joel joins us here in our Bloomberg Interactive Brokers studio. Joel, are you a Misfits vegetables guy, Misfits Market guy?
I get a lot of produce and a lot of vegetables from a lot of different places. Misfits not included. I do love food that comes in a cardboard box. I think
I do too.
It's a really novel thing where I don't have to go to the store. I still go to the stores, like shopping. I like groceries. But you know what really struck a chord with this when Andrew reached out with the pitch was this mission that the Misfits founder Avi Ramesh had, which was to really tackle food waste. And food waste is actually a thing that I've had a lot of interest in for a really long time, because so much food, good food, edible food, ends up in landfills. So if you don't compost at home, you definitely look into composting. In certain neighborhoods in Brooklyn, you can do it in a little brown.
We got rid of it in our neighborhood.
Yeah. Well, anyways, what I liked about the Misfits idea was that he realized that there was some stuff that was just turning into waste, and then he turned it into a business, and that is just awesome. And I thought that was like a perfect way to think about the good business issue. So there's opportunity even in produce that is misshapen and ugly. And it shows also something that can start one place can grow into something else. So Andrew, take us back to the before times and how Avi Ramesh kind of hit on this idea.
Yes, the before times. So this was back in 2018, as he had mentioned to me. He was apple picking one day with his then fiance, now his wife, and he noticed all these apples just on the ground at the orchard, and asked the owner, could he take some of these, and what would the owner charge him? And the owner literally said, take a crate and give me $20. And drove home with what he had told me were about 75 of these organic apples. Some of them had pock marks, some of them were dented, but they all on the whole looked good and they were edible. And that's sort of what began this weird, curious journey for him. He wondered if there were other farms that also had organic fruit and vegetables that he could also sell, but could sell at a discount because he could buy them at a discount because it was just all the unwanted stuff that farmers couldn't offload onto the distributors that end up stocking the grocery stores that we all go to.
And bring us up to now a little bit. What's he turned it into, and what did the pandemic do to his business?
Yeah, I mean now it's a fully fledged online grocery. During the pandemic, he had 100,000 more people sign up. So he ended up, coming into fall 2020 with about 180,000 subscribers to this. Everyone who just wanted food at home, and in that time, he realized this could be a viable business. It could be something bigger than just organic and weirdly shaped fruits and vegetables. He built new fulfillment centers. He started adding products, including stuff like Fruity Pebbles, which inevitably
organic ones
guaranteed is not not organic. But if you can find organic Fruity Pebbles out there, that's a business idea unto itself. So he adds all these new products and realizes that people will pay for food being delivered to their houses instead of having to, maybe drive to a grocery store and jockey for parking and do all these other things.
Well, it's pretty remarkable.
That's what he did today.
Yeah, they've built up this also, as you write about, this private label business, and that's one of the things that my wife and I have noticed is that we can get these, like discarded waffles made of bits that are just delicious that end up being like gourmet waffles that are pretty awesome. It's funny though, Andrew, because the idea of shipping food or meal kits to people's homes is nothing new in the last 7 years or so. And I'm wondering what you learned about the business and the viability of it here, because if we think about a company that has tried something similar, we think of Blue Apron, for example, and that company has a real questionable future with the way that investors have punished the stock and what we've seen in terms of executive turnover. What did you learn about the company's business?
Right. I think Avi would say to you that online grocery, he is difficult and it can be challenging. I think the way that he has tried to go about certain things, for example, just straight up shipping food to people's houses, he doesn't rely on his own network of drivers. He goes through FedEx and UPS. He tries to make it a situation where, because he's building in this discount for subscribers, he himself can get food at a discount that can maybe bring down some of his capital costs. I think the biggest challenge for him is he needs to expand his inventory because he just needs more customers. You need a larger customer base ordering boxes and ordering more food in every box. Because once you begin ordering more food in every box, all of those marginal costs around shipping, around stocking the shelves, become lower and lower for him. And that's the big challenge that we kind of touched on in the piece. He wants to expand his inventory. He wants to make this kind of a one-stop shop for people. But in order to do that, you got to be able to go on Misfits Market and know that anything you would typically buy in a brick and mortar store, you can also get online and shipped to your house. And that's kind of where he's at now and what he's trying to do with his business over roughly the next year, 2 years. Expand the inventory, sign on more people, and hopefully have enough of a customer base ordering so much stuff in every box that you can bring down all those marginal costs.
Andrew, my problem is, though, if it's Misfits, isn't that the lure? Isn't that what sets him apart and makes him different? Because the food business, we know, can be really low margin unless his margins are much better than typical supermarkets. But I thought, having the Misfit kind of character makes it kind of a standout. But it sounds like he's going maybe more mainstream, or trying to, as he ups the SKUs, and just got about 30 seconds left.
Yeah, I think he's trying to go more mainstream, and inevitably that might mean some compromises. What Avi said to me was that while organics will always remain the core of the company, he thinks he can look at food waste in a different way. For example, some companies might order a shipment of yogurt, but the yogurt comes with all the old labels, and grocery stores won't stock those. But that's an opportunity for Misfits to come in and say, the yogurt's fine, we'll buy it with the old labels and we'll sell it that way. And that's kind of a weird, interesting idiosyncrasy of the food business, of the grocery business, where he thinks Misfits might still have an advantage there, even if it isn't solely being built now on weird-looking screwball fruits and vegetables.
And, if we've learned anything, it's Tim will eat it.
Oh, yeah.
If it's a waffle bid.
As long as it's not an ice pack.
This guy has a bottomless pit. Travel with him, and he eats everything in sight. See him on a plane. Andrew Zaleski, freelance contributor at Bloomberg Business Week, and Joel Weber, the editor of Bloomberg Business Week. The new issue is out, and check it out.
It is 2:53 on Wall Street. Charlie Pellet with a look at some of today's company headlines. Chip of Broadcom delivering an upbeat sales forecast for the current period, indicating the demand does remain strong from corporate customers and the data center industry. Reuters, meanwhile, says Broadcom is facing an EU antitrust probe over VMware. Shares of Broadcom, they're up now by about 3%. Lululemon Athletica shares falling the most since the start of the pandemic after lower than expected profitability raises concerns about a pileup of inventory. Lululemon down now by 13%. China this week said it will change its COVID control policies. That is welcome news to automakers, specifically Mercedes-Benz. Ola Kalenius is the CEO of Mercedes, and he spoke this morning with Bloomberg Radio.
China is the biggest car market in the world. In fact, if you look at the size of the Chinese market, it's actually bigger than if you put United States and EU together. So what happens in China matters for the auto industry and, of course, matters for Mercedes-Benz. We have now come through a period here in the fourth quarter where we have had some lockdowns, in some places actually extensive lockdowns, which shuts down dealers. And frankly speaking, if you're at home, you're not going to go to a dealer and buy a car.
Sources tell Bloomberg TC Energy is planning to restart one leg of the shuttered Keystone oil pipeline beginning tomorrow. Yesterday, the company declared a force majeure on shipments. TC Energy right now down by 0.3%. A mixed day on Wall Street. Those are the company stories we're following at this hour. I'm Charlie Pellet.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Hey, it's Bloomberg Business Week. Tim Stenovic and Carol Masser live in the Bloomberg Interactive Brokers studio. Let's get an update on world and national news. To our 99.1 newsroom in Washington, D.C. we go with Nancy Lyons. Hey, Nance.
Thanks, Tim. Vladimir Putin says Russia may add the nuclear first strike to its military doctrine. His comments to reporters today came just days after the Russian president warned that the risk of atomic war is rising. Former U.S. Defense Secretary William Cohen tells Bloomberg Putin's comments are telling.
Well, his talk reflects his weakness. He is losing badly on the battlefield. If you look at what is taking place in Ukraine, his forces have been poorly trained, poorly led, poorly equipped, and they're being put into a meat grinder. So he is losing, and he knows he is losing. And so now he's upping the game, so to speak, by saying, well, I might consider using nuclear weapons.
Former U.S. Defense Secretary William Cohen. The White House is encouraging seniors ages 65 and over to get the updated COVID-19 vaccine bivalent booster during the holiday season in order to stay protected against the virus. Dr. Anthony Fauci, the director of the National Institute of Allergy and Infectious Diseases, admits this is a new way of thinking from the usual vaccines for things like pneumonia and chickenpox.
Other vaccines of the other types give you immunity that's lasting in decades and sometimes a lifetime. Unfortunately, that's not the case with COVID. So we've got to keep up with that virus.
Fauci and the rest of the White House coronavirus team are taking questions from AARP members. For those of you flying this holiday season, the TSA is issuing a reminder you should travel with unwrapped gifts. Spokesperson Lisa Farbstein says if a wrapped package triggers an alarm at an airport checkpoint, TSA officers will need to unwrap the gift to resolve the issue. She says it's best to consider using a gift bag or a fancy gift box. Another shocker today at the World Cup. Brazil and its star Neymar are out, losing to Croatia in a match that went into penalty kicks. Argentina currently leads the Netherlands 1-0. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now back to you, Carol and Tim.
All right, Nancy Lyons, thank you so much. Carol Masser along with Tim Stenovic right here on Bloomberg Business Week. You know, we look at a lot of different things to get indications of where the economy goes from here. A big factor and a great indicator is real estate. And Tim and I caught up with Barbara Fox of Fox Realty earlier this week. Here's what she has to say.
The one interesting thing about the market is that it will always change. It actually changed from last week to this week a little. It had been very slow over the past 2 quarters. Right. After the first quarter of 2022, which had been very similar to the year before, which was quite good. But since then, it's been really on a downtrend, and particularly regarding all of the things and the war in Ukraine and interest rates going up. And
what impacts the high-end market the most? Is it geopolitical? Is it interest rates? What is it?
I think it's just the general economic condition more than anything, and all of these things go into play with regard to that.
So the level of activity you're seeing right now is more than you were saying?
Well, all of a sudden it started to pick back up, and this is very unusual for this time of year. This is the holiday season, and people don't think about real estate, but they are thinking about it now. So I believe what's happening is that this is a glitch here between buyers and sellers. Buyers know that the market should be more favorable to them, and sellers haven't really gotten it yet.
That was Barbara Fox. She's president of Fox Residential Group. You can hear more of the interview on our Business Week weekend show tomorrow morning at 8 a.m. Wall Street time, or check out our podcast feed at Bloomberg.com. The Manhattan market, though, it's a different animal than the rest of the country, Carol.
Absolutely. And I was going to talk about a Lennar story that you just brought to my attention.
Go for it.
One of the biggest U.S. home builders offering to sell thousands of homes to rental landlords at a time when sales to everyday buyers have slumped. Coming up, we're checking in on the markets.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And right now we're about 60 minutes away from the end of the trading day and the week. Romaine Bostic here alongside Katie Greifeld. We're joined by our colleagues Carol Massar and Tim Stenovic. Welcome to our audiences across Bloomberg Television, Radio, Quick Take as well is on YouTube. Carol, economic data, it is spoken. We got a big setup here heading into a Fed meeting next week. One more big economic data point, CPI. It looks like the market has sort of placed their bets.
Yeah, they definitely are. I mean, it's a big decision next week in terms of the tone for the markets. What I do find is interesting, Romaine and team, about the trade right now is that you've got individual names that have just been on a tear. Take a look at Netflix. The last 6 months, it has really been quite a bullish trade for this one. Netflix today alone is #2 top gainer in the S&P 500, NASDAQ 100. The love affair from Wall Street, it's continuing yet. Two more analysts weighing in on Netflix specifically, upgraded to overweight from equal weight at Wells. They raised their price target to 400 from 300. The stock at 323 and change in today's trade, up more than 4%. Then Cowen naming Netflix as its top-rated large-cap stock pick for 2023. They raised their price target to 405 from 340 a share. They're talking about new monetization levers, such as the lower price ad tier, revenue accelerating the second half of the year, free cash flow growing. This stock, guys, up 95%, excuse me, since the June 14th low of this year, up more than 50% since October 11th. I mean, all of a sudden, Wall Street, and we've seen the stories on Bloomberg, just buying into this name in a big way.
Is this just because of the crown?
Oh, I was going to say, is it Meghan or Harry?
Oh, I mean, the crown is really good. I'm not caught up, but
for real?
I haven't caught up.
Do you
but
not watch The
when
Crown?
When I was with my parents a few weeks ago, they were like so eager to watch the most recent season. They made us all turn it on, and I watched it. It's very good. Yeah.
In capturing.
Yeah. Okay. So
it's a pretty cool show.
All right, we're not the only ones watching it. Hey, I want to switch gears a little bit and talk about something that's actually not moving today. For actually once over the last few weeks, it's the Nasdaq Golden Dragon Index. It's down 0.6% right now. It was up earlier in the day. It was higher by as much as 0.7%. We've been talking a lot about what a reversal of China's COVID-0 policy would look like, and we've seen, investors remain really optimistic about what that would look like, but there's so much uncertainty here about what overwhelmed hospitals would look like and what the effects of a reversal would actually look like on the economy.
All right, let's take a look here at the broader market here on the day. The price action fairly muted, but remember, we came into this week here with a pretty big break below a lot of those key technical levels after coming up last week, of course, with a lot of tests to the upside, a breach to the upside on a lot of those key levels here. You put it all together, it's basically flat to unchanged here on the day, but down significantly on the week across the board.
If you look under the hood at the sector level, it's a pretty even split. 5 green, 6 red. Real estate is your gainer, but we're just talking about 0.6% there. What's interesting happening at the bottom of the pack, energy, once again, down 1.8%. This is the 7th straight day of losses for the energy sector. That is the longest streak since the end of 2018. So momentum is building in a bad way.
Yeah, well, one of the big movers that we've seen on both the daily basis and a weekly basis actually belongs to ConocoPhillips. Phillips actually down now for an 8th straight day here, down 2% here on the day and setting up for a monster drop here on the week. Meanwhile, you stick with the commodity space. Valley actually up about 3%, the ADRs that trade here, and that's largely on the back of that surge that we've seen in iron ore prices and a big bet right now on that reopening in China and what that's going to mean for the companies that make a lot of the foundational materials. Lululemon came out with earnings. There was a lot of talk about this stock was basically just recession-proof. I think the earnings we got last night showed that maybe not quite the case. Those shares down 13% here on the day, and we spent a lot of time talking about Netflix, but actually a lot of its peers actually rallying here on the day, including Warner Brothers Discovery, as well as Paramount. Paramount up 5% here on the day. There was a lot of talk coming into today, guys, here about the economic data, a big focus on PPI, a big focus also on the sentiment numbers, but there was another number that one of our guests earlier this week flagged, and that was the quarterly flow of funds report coming out of the Fed, and I thought this was interesting. It actually showed household wealth, which of course we know surged during the pandemic, partly because of stimulus, partly because of run-up in equity prices. That's come down. We've actually seen pretty significant drops for the last three straight quarters here, so this only goes through the third quarter, but most likely that trend is continuing here in the fourth quarter, and that feeds in, guys, into this whole consumer narrative, the idea of how much money we have to spend, and more importantly, how willing we are to spend it. If household wealth is coming down at this level, maybe there isn't necessarily a consumer spending growth story to be told.
And yet we got consumer sentiment numbers that, show that households are pretty resilient and they're pretty upbeat in terms of the outlook. But that is interesting. And I do think about the wealth effect, Romaine, in terms of if the Fed continues raising rates, what does that do to the rethink on valuations? Does it continue to put pressure on equities? Weighing in, though, on what the Fed is likely to do and continuing to be aggressive is former Treasury Secretary Larry Summers. He caught up with our own David Weston for Wall Street Week. He talked about the Fed and its expectation of continuing to raise rates and the impact of such. Here's what he had to say.
So I think there's a growing coming together that we probably are going to make more progress on inflation than many people expected, but it's because the Fed is going to do what's necessary, but there's likely to be some adverse aspect of that.
Yeah, that adverse effect is what we are all trying to gauge as investors and observers of the financial markets. That's, of course, former U.S. Treasury Secretary Larry Summers talking with David Weston for Wall Street Week this week. But this is the tricky spot we are in, Tim.
It is, and I want to go back to the wealth effect and what Romaine's board had said, because I think that's a really important point, and it's kind of come up time and time again on our program this week, Romaine. We talked about it with Vince Signorella earlier this week, and he essentially said that the consumer at this point is tapped out. It's not enough to be concerned. We don't have to yet be concerned, but he used the term tapped out several times in an interview. And Rich Miller also talking about the wealth effect when we interviewed him about his the bubble popping story yesterday.
Yeah, because I mean, the people I think sort of are looking for the positives. They'll say, well, household balance sheets are sound. The credit conditions, at least as far as on a percent basis of their incomes and wealth, certainly isn't what we saw during the financial crisis. But this isn't really just about whether we're going to fall off a cliff. It's about whether there is a growth story. And it's hard to find that. When you look at data like that, you start to think, where is the capacity to spend right now?
And if the consumer is really tapped out, what does that mean for margins? Consumers have been willing to accept some of that price increase so far over the last year or so. If that story is over, what does that mean for the health of corporate America? I'm not sure.
Consumers not tapped out. Even our Bloomberg economics team saying that they've got lots of money. We'll continue this conversation. We'll be back in less than an hour's time. Our cross-platform coverage.
Is Carol just cutting us off? Is that, she's just like, I'm done with
I'm
this?
going to have to call Vince.
I got a producer in my
got some shopping to do.
I listen to the producer. Beyond the Bell coming up. We're going to count you down on this Friday, 4 p.m. Wall Street time. Shh, Romaine.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this Friday. A lot going on, and we mentioned Microsoft on our radar. So too is Tesla on this Friday. Really all week, to be quite honest. Yesterday, it was a Bloomberg exclusive about Elon's bankers considering replacing some of the high-interest debt he layered on Twitter. And then you had news overnight that Tesla is suspending output in stages at its Shanghai electric car factory from the end of the month until as long as early January. This, according to folks familiar with the matter, amid production line upgrades and slowing consumer demand. And then, Tim, there's this story about the Tesla board.
Yeah, this was a really good one. It's all about how the board is MIA as the troubles seem to be piling up. So why is the stock rallying today? Still down nearly 50% year to date. With more, here's Bloomberg News EV reporter Sean O'Kane. He covers EVs and automotive startups. He's with us on the phone from Austin, Texas. Sean, you wrote this story yesterday that I highlighted on our program because I thought it was so important about one of Tesla's largest individual shareholders essentially saying that the board of Tesla is MIA. What did he mean?
An interesting thing. I think there's two things that I want to say about it. One is that what I noticed yesterday was not only one of the largest individual shareholders acting out a little bit, but also a lot of other supporters and Tesla blogs. There were a lot of people who have been calling for stock buyback for a while, but also more broadly are a little bit sounding a little concerned in a way that they don't normally. A lot of the biggest Tesla supporters are able to sort of shelve that concern and in spirit or in search of trying to uphold the spirit of Tesla. So I think the thing that really struck me was that they were sort of speaking out in a constructive way, I think, from their perspective of saying, hey, like Elon is pretty clearly splitting his time in a way that's even out of bounds for Elon. So is there ever going to be any sort of peep from the board saying, maybe we should figure out a better way to handle this?
Who's on the board? Can we talk about the board composition? I see somebody
There's
with
some familiar names on there.
someone with the last name of Musk.
Okay, and not Elon?
I see two,
Okay,
actually.
I was wondering.
There's a Murdoch. There's definitely people that are familiar to our Bloomberg audience. Walk us through that.
Yeah, I mean, it's a rather friendly board to him. We're talking about people like Larry Ellison, who's a pretty close confidant to him. Raman Denholm, who was brought in to replace him as chairman after he was, he received the SEC settlement in a couple years ago that took him out of the chairman role. And so I don't think there's really an expectation that these people would ever sort of go around him or even put any sort of restrictions on him. And I think that, Elon Musk would probably say in response, if he were to ever respond to these people or even to the things that we write, I think he would probably say something like, hey, look, like it's not like I'm absent here. One of the stories that some of my colleagues broke this week was that he brought in Tom Zhou from China to help run the Austin factory. This is a guy who joined Tesla in 2014, helped build out the supercharging network, which is sort of like the sleeper advantage over all the other companies in the EV space, and then basically help build the Shanghai Gigafactory in the span of essentially a year, which is an incredible feat even in China. I think Elon would say, hey, look, I brought this guy over here. I admitted that there are some issues with the plans we had for the Austin factory, and I'm here doing things. I'm here, I may be over at Twitter digging around people's, personal Slack DMs from years ago and trying to stir up some drama, but I'm also here making changes and helping us hit the goals that I have for this company.
So how do you explain why investors have reacted so negatively over the last year? Still down 50% year to date. I know there are concerns about demand. Elon's been tweeting about high interest rate environment.
There you said it. Tweeting.
Yeah,
Twitter.
I know.
Sorry, Tim.
Sorry, Sean. I mean, what do you make of it? You dig closely into this company.
I think it's really, broadly, I think this is a reaction to the fact that this is just the most uncertainty that Tesla's really dealt with in the last couple of years. I mean, it really was not that long ago that we were talking about Tesla as a company that never turned a profit, was looking like it was going to have a lot of trouble turning a profit, was mired in around 20 billion, I think, at its peak in debt. And, by its own admission, had really messed up the original plan of the Model 3 ramp up, which was the crucial car. And by Musk's own admission, only a couple weeks away from bankruptcy back in 2018. So after that, it caught itself on really solid footing in many ways. I mean, the Model Y became a really big success. All of a sudden, it's profitable every quarter and by a decent amount. And it's become, that just led to this sort of natural period of, even without a lot of new products rolling out over the last couple of years, basically none since the Model Y that have hit the road until the Semi last week, just actual stability for this company that was usually pretty unstable. And I think what we've seen over the last couple of months, amid the broader downturn in the market, is just people reacting to more volatility than they're even used to with Tesla. And also, you have to remember, a lot of people coming into this stock that weren't in it 3 or 4 years ago, 5 years ago, who this is their first go round with sort of some unsure footing when it comes to Tesla.
You know, our auto columnist, Hannah Elliott, who writes for Bloomberg Pursuits a lot and Bloomberg Business Week, had out a column, and she was just looking at what maybe is to come for EVs in 2023. She noted that the average price of an electric vehicle in the U.S. is $66,000, 13% higher than 2021 if you look at Kelley Blue Book. The average price for an internal combustion engine vehicle is about $48,000. Teslas aren't cheap, but they definitely have had first mover advantage. In order for Elon to really kind of be or continue to be a big player, does he have to bring the prices down, or can he just be and play in the higher end of the market and still continue to be, pretty dynamic?
That's a really good question. I think it also probably cuts across the different sort of main locations where they're selling. In the U.S., I think there's probably still runway for them to stay around the price point that they're at. They've actually, sort of always in the U.S. been pretty good at finding buyers who are able to absorb that cost here, and they're making a product and a sort of buying process that appeals to those people in a way that other new electric entrants don't. And I think there's probably more runway here. I don't think that's the case in China, where we've seen them cutting prices a little bit recently, adding incentives on in a way that is not really the MO for Tesla, and that tracks with a sort of broader downturn in the Chinese auto market that has sort of especially accelerated in the last month or two. So I think there may be a split there. Europe is sort of the outlier, where I think there's probably a lot of untapped potential for them there to stay at these price ranges. The problem there is that they're sort of behind the ball in getting the Berlin Gigafactory up to speed to be able to support that market, which is why they're exporting Chinese-built vehicles to Europe, which so far has seemed to be okay and is actually working for a lot of the Chinese EV startups. They're finding a home in Europe.
Sean, in Europe, to what extent are they concerned about competition or facing competition from legacy automakers like Volkswagen, BMW, Mercedes, and more?
I don't know that they're very concerned about it. We're still having trouble, or we're still not really seeing a lot of those OEMs put out EVs in super high volume. Volkswagen's probably the closest to that, and even they've had a lot of trouble with the software in their cars, and they're delaying certain models even across the larger Volkswagen group because of that. So I don't think that's really the bigger issue for Tesla. I think maybe in Europe and maybe in these other markets as well, the bigger question about the cost in the coming year or two is the question that all the other companies are going to have to solve, which is that lithium prices, as our friends on the research side of Bloomberg just said in a report this week, lithium prices actually went up this year for the first time in the 12 years that they've been tracking it. And so there are so many cost pressures separate from the supply chain issues we've spent the last 2 years talking about so much that are specific to EVs that I think we're going to see a lot of wrestling over in the next couple months.
In terms of the outlook, just got about a minute or so left, Sean. I mean, I'm looking at some of the major shareholders, obviously Elon, when it comes to Tesla, Vanguard, BlackRock, State Street. Does he have to be worried about any investor saying, you know what, Elon, maybe you need to put somebody else in charge of Tesla? Or is it because he is so identified with this company, you really kind of don't want anybody else in charge?
It's like one of those things where I think both of those things might wind up being true, at least for a little while.
Yeah.
I think it would be a little out of form from what we've seen for some of those institutional holders to kind of buck back a little bit like that. But I wouldn't put it past anybody. Things have gotten really strange in a lot of ways lately. The thing I think we should just all keep in mind is he's spoken a lot over the last couple of years, for a while, that he doesn't necessarily want to be CEO of Tesla forever. Maybe, this whole Tom Zhu thing that we tracked down this week started in a blog in China that was saying that he was taking over some sort of CEO role. That turned out not to really be the case, but I don't think it's out of bounds to think that he may have a successor in mind and that it may be coming from China. Right. Whether that happens in the near term or not, I mean, his brand, his personal brand's always going to be associated with the company, and maybe a little bit of distance would actually help.
Although we've reported on Gwen Shotwell over at
SpaceX, yeah.
She's president and COO, and she's really been calling the shot. So interesting. And I just want to point out, Vanguard added almost 26 million shares at the end, as of the end of the September reporting period. BlackRock about another 6 million Tesla shares. We'll have to see what the fourth quarter brings. Sean O'Kane, thank you so much. EV reporter at Bloomberg News, joining us on the phone from Austin, Texas. Tesla, by the way, one of the top performers in both the S&P and NASDAQ 100 on this Friday. This is Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Mixed day on Wall Street. Bank of America's CEO Brian Moynihan says he's not leaving his bank to succeed Janet Yellen as Treasury Secretary, also telling CNBC he has got the greatest job in the world. He does say B of A sees a recession next year. Now let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading quiet today with the Dow currently down 96 points. S&P's dropped 4. And NASDAQ right now is little changed. The U.S. 10 yield at 3.56%. Gold is up 10. Oil is trading in the green. but Bitcoin is lower by 0.3%. Among the main 11 S&P sectors, leaders were real estate and telecom. Energy and healthcare were under pressure. And leaders to the upside in the Dow, Disney and Salesforce, while Chevron and Amgen led to the downside. After earnings, Lululemon fell 13%. And in other news, Air India is close to signing an order for 150 Boeing 737 MAX jets. Wrapping things up, Carvana jumped intraday on a report creditors don't expect a bankruptcy soon. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stanovic, live here on Bloomberg Business Week. I want to make one clarification, or you pointed out to me, I'm talking about, the different, was it Vanguard, BlackRock, State Street, some of the guys that were buying Tesla shares in that third quarter, and a lot of it is indexing probably.
Yeah,
right?
these are the
money's coming in, they're going to have to pick up Tesla shares.
Yeah, some of the biggest indexers. But that said, some of them offer managed products too.
Yeah, so some of it could have been
exactly, especially
investor
BlackRock.
All right, so we just wanted to put that. I wanted to put that out there. Hey, staying within kind of the innovative, disruptive space. We did want to kind of get to the latest on FTX and Sam Bankman-Fried, because this morning, the former FTX CEO, Sam Bankman-Fried, tweeted that he is willing to testify before the U.S. House Financial Services Committee about the disintegration of his crypto empire. This is coming, right, Tim, yesterday after he missed a deadline.
Yeah, it was set by a U.S. Senate committee for a response to a request to testify at a hearing that comes next week, December 14th. Lawmakers, though, now saying that they are continuing to work with him to have him appear before Congress. In our weekly crypto segment, joining us now is Kathy Yoon, Chief Legal Officer at MPCH Labs. This is a company that focuses on something called multi-party computation. It's a way for multiple entities to work on a computation, but do so privately. She joins us via Zoom from Brooklyn. Kathy, we're going to get to what the company does in just a second, but first I want to get your take on SBF, FTX, and as Katie calls it, the alphabet soup of what's going on. How damaging is the downfall of FTX and what SBF continues to say to the crypto industry?
Yeah, I mean, it is damaging just because it gives the crypto space a bad name. But I do want to stress, and I hope people really realize that this is not a crypto issue. This is not something that is singular to crypto, or it's fraud. And it's unfortunate
to be fair, like investigators are looking into to determine exactly what happened. So that's certainly your perspective and your point of view, but safe to say that we're still investigations ongoing to really figure out what happened.
Right. I mean, there wasn't an issue with a blockchain or an issue with a hack where, I mean, this was mismanagement, misappropriation of customer funds. I mean, it sounds like something that we've seen over and over again in the traditional space. So yes, we're still waiting for details to come out, but this is other companies who are working in the crypto space. We have good internal controls. A lot of companies are making sure that they're segregating customer funds, basic business, running a business company 101 stuff.
It's interesting, though, because we talk about it in the context of it being 101, but you had a lot of investors in there who have experience beyond the 101 level of education when it comes to making investments. How do you think it happened?
I've spoken with a lot of investors and a lot of people who've unfortunately lost money this year from a number of unfortunate events. And the common theme there was that they were afraid of FOMO, right? Fear of missing out. They saw this rocket ship and they saw all these different opportunities. They saw a lot of people around them making a lot of money. And I think, unfortunately, if you're blinded by the possibility of outsized returns, you might turn a blind eye to doing basic diligence. And so the takeaway from a lot of institutions and investors that I've spoken with is the biggest lesson that they've learned is not to get taken astray by FOMO.
Well, I feel like it's not only FOMO. I feel like as we learn more and more, Kathy, is things are like increasingly complicated and not so transparent, which I thought blockchain, or I thought crypto, and I use crypto loosely as a kind of a generic term, was supposed to make it kind of pure in terms of transactions. And I feel like what started from like kind of peer to peer has now got all these layers in the middle. And like, first of all, tell me about what you guys do, because you do multi-party computation, which, to be fair, Tim and I are like, what is that?
I did a lot of Googling when I was doing my research this morning. I
reading
mean, there were
white
white
papers.
papers coming up.
Yeah. I mean, it's really cryptography. It's something that's actually been around longer than Bitcoin has even been around. It's a way to really anything that requires authentication, whether it's an approval process or whether you're trying to prove your identity to an organization or a membership to something. If you think about anything that requires proof or anything that requires validation and authorization, this is a type of technology where you're able to use cryptography to do that. And so I'm just going to leave that at a high level. And
give us some examples of where the technology would be applied.
Like, is it what we do when we want to get into our bank accounts or our investments? Like, what is it?
Right. So one instance is, say for a large institution, you need to move a large amount of funds. In the traditional space, those types of approvals are still done by someone sending out an email to 10 people or whoever needs to approve something large in a large organization. And then people send emails back saying, I approve, I approve, I approve. Not exactly the most trustworthy, not exactly the fastest way to do it. But if you're able to use cryptography and to kind of identify who's the right group and who are the right people in that group who are able to approve something, you're able to kind of put something out there via software, and you're able to get those approvals very, very quickly. And because they're bound cryptographically, you can trust that it's been done according to the policies and procedures of that institution.
And you guys are bringing, and the connection with crypto or blockchain, tell us about the connection for you guys between that universe.
Right. So our first product is called Fraction, and we're really, it's a technology toolkit to allow institutions to safeguard their own crypto. And this kind of goes to your question before about, it looks very layered. We have all these big organizations, and it kind of is getting away from the decentralized nature of and the benefits of crypto. This is so you don't leave large amounts of crypto on an exchange with the fear of it getting caught up in an unfortunate situation like this. The exchange gets hacked. This is a way for you to safeguard your own crypto. But for large institutions, you need to have the proper railguards in place. You have your policies and procedures, and that dictate how you're able to transfer these things. And so we have a policy engine platform where you're able to establish your organization, you're able to establish all the relevant people who are able to approve the transactions. And then you're able to create wallets for each type of crypto asset that you're engaged with, and to be able to set out the rules of who needs to approve any transfers in and out of that type of crypto.
Hey, Kathy, I hear you talking about this, and I certainly get it to a certain extent. I won't pretend that I totally get it, but it makes me think of how complex some of this stuff is. And I wonder to what extent that's a barrier to entry for, the quote unquote normal people who you want to see adopt this type of technology. Is it just too hard?
So that's what we're working on right now. I think there are, outside of the noise and outside of the craziness of FTX, there are a lot of companies and teams who are really focused on trying to make this more user-friendly. I think a huge criticism is that there is a high barrier to entry, and it's complicated. It's not something that your grandmother or even your mother may do. I think
my grandma's not even on the internet, but she's 100, to be fair.
Yeah, come on.
My mother cannot use a banking mobile app to save her life, so it's not for my mother at this point. But we're trying to find ways where the emphasis is not on crypto, it's not on blockchain. When you are in your mobile app and you're trying to raise a transaction, you don't think, well, how does my mobile app work? What is the tech stack underneath it in order for me to be able to make these transfers in and out of my bank account? The goal is to be able to get to that point where blockchain is not this big buzzword. It's not scary. It's a tech stack that just kind of works in the background, and people don't accept it from the knowledge that it's blockchain based, but it's because it's a solution.
It's like AI being, we're surrounded by AI. We don't even know, like as we do searches or what have you, and stuff's going on. We got to run. Kathy, thank you so much. Have a good weekend. Kathy Yoon, Chief Legal Officer at MPCH Labs. As we said, a company that focuses on multi-party computation away from multiple entities to work on a computation, but do so privately. So my brain hurts.
Yeah, mine does too. But that's what she's working on, making it easier.
And I appreciate her honesty about that, of like simplifying what all this means and what it does.
Well, to help us tell us what it means, let's go to World and National News. We got Nancy Lyons in our 99.1 studio. Hey, Nance.
Thanks, Tim. Brittany Griner is back in the United States. She landed in her home state of Texas earlier this morning, and Houston Mayor Sylvester Turner says they will light up City Hall with red, white, and blue as a celebration. The prisoner swap that brought her home, though, is coming under scrutiny, especially because it did not include another American held in Russia, former Marine Paul Whelan. National Security Council spokesman John Kirby says he is viewed differently.
Paul was convicted on espionage charges, and in the Russians' mind, in the Russian mind, that makes him different. That makes his case unique, and they were treating him differently and in a special category. From the very get-go. We did everything we could to try to get him and Brittany back together, but to no avail.
Kirby says despite the hurdles, they will keep working to bring Paul Whelan home. Democrats are seeing a changing political landscape with the news that Senator Kyrsten Sinema of Arizona is changing her party registration from Democrat to Independent. We get details on that from Bloomberg's Amy Morris.
Democrats had just secured a one-seat majority in the Senate, and while they do still control the majority, their hold is a little less secure now. Sinema told Politico she would not caucus with Republicans and that she would vote how she has during her tenure in the chamber. She did not explicitly say that she would caucus with the Democrats either. She says nothing will change about her values. In an op-ed, she writes, she never really fit into either national party. In Washington, I'm Amy Morris, Bloomberg Radio.
At the World Cup, another stunner, Brazil, with a lineup that includes standout Neymar, was eliminated today by Croatia. Argentina is leading the Netherlands. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A major move lower since our last update. The Dow now down 213 points. We've got the Dow down 0.6%. S&P lows of the session down 18 points, drop now of 0.5%. 19 minutes to go ahead of the close. NASDAQ in the red as well, down 42 points, drop there of 0.4%. Stock traders are refraining from committing to riskier bets at the end of a week that saw recession fears resurface. Also, a hotter than estimated inflation reading only a few days before next week's Federal Reserve decision. So the PPI report is behind us. Wall Street's attention now focused on the Fed meeting, as well as that consumer price report. As for the economic outlook heading into the new year, Freya Beamish is chief economist for macro research at TS Lombard in London.
In 2023, there's this sort of kind of limbo era where it's not really clear what's going to happen, and there is this consensus that there'll just be a recession, and then you buy, and then everything's going to be okay because it's not going to be that much of a deep recession.
American Airlines Group and JetBlue Airways plan to expand domestic and short-haul international flying next year under a much scrutinized operating partnership focused on the northeastern part of the U.S. American Airlines shares down 0.9%. JetBlue now down by 0.5%. 10-year yield 3.57%, with the 2-year 4.32%. Spot gold up 0.4%. $17.96 the ounce. West Texas Intermediate crude higher, little change, $71.50 a barrel. The key takeaway, though, a sudden move lower, S&P down 0.5. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we've got about 18 minutes left in today's trading session. Looking at the equity trade, we are rolling over and we're back towards our worst levels of the session on both the S&P and the Dow Jones Industrial Average. Still just down about 0.6% on the Dow, down about 0.5% on the S&P. NASDAQ down about 0.4%. Not dramatic moves, but we are seeing some selling as we get closer to the close, and we're on track for some pretty steep losses this week, Tim.
Yeah, the S&P at about 39.45 right now. 5 weeks, down 3%. Let's get into it with Luca Paolini, Chief Strategist at Pictet Asset Management. He joins us with us. He's with us right now.
He's
Luca.
with us.
Hello.
I just looked up and I realized
Yeah,
you're not
I'm here.
in London.
I'm here.
You're not in London right now. You're right in front of me.
I'm very happy to be here.
It's good to see you back in the Bloomberg Interactive
thank you.
Brokers studio. So we spoke a couple months ago, and a lot has changed because we're starting to get a little bit of a softening when it comes to that inflationary data that we are so concerned about. Yet, are investors getting ahead of themselves with thinking that there's going to be some sort of pivot or at least downshift from the Fed?
Well, look, I think in terms of inflation, today the numbers were actually more on the negative side. But I think it's clear that the key kind of trend, or the major trend, inflation is down. Energy prices are falling, transportation costs are falling, rents have peaked, and probably even wage growth is a little bit decelerating. So I think the question really is if inflation is going to fall enough for central banks to reverse their policy. I don't think so, for a very simple reason. They made a mistake before. And the worst they can do is to ease too early. And then the risk is that they will lose their credibility.
Or inflation
and
takes off
potentially
again,
their
right?
independence as well. So the risk here is that if inflation falls a lot, central bank will be very reluctant to ease the monetary policy.
So should it be just like, folks, global recession, one and done, just deal with it, that's what's coming next year?
I think is a recession almost inevitable from my point of view globally, but I don't see, though, the reason why the recession will be very deep, because the private sector is in decent shape, banks can lend, the consumers have excess savings, and even if you look at the corporate sectors, I don't see the problem of over-leveraging. So I don't think it's going to be a deep recession. I think we should talk more about a period of stagnation, which could be potentially for markets almost as bad as a recession. Because normally in a recession you have the Fed cutting rates and we get out of it. I see more the risk of a stagnation, earnings falling, and probably multiples not able to go up enough to offset this weakness in earnings.
Well, let's talk about earnings, because earlier we were talking with our own Mike Regan, who follows the markets, and he said right now, based on forecasts, analysts have 2.5% earnings growth next year on the S&P 500. Do you feel like that's optimistic?
I think it's optimistic. I don't think we have zero, but I think that 0, 2, or 3% is a big difference. I think though the risks are more on the downside.
2% is pretty anemic, is what you're saying? Or
yes, I think, you know, the point here, the nominal growth would be very weak because inflation and growth would be falling.
Right.
Margins are under pressure. Interest costs are going up. So it's difficult to see where the earnings kind of really should come from.
Because companies, I feel like in a lot of ways, Luca, have been able to maintain some of their margins right now, and that's surprised everybody.
Yes, definitely margins are more resilient than it used to be, but let's not forget that we have also, inflation helped them. And when you have nominal growth...
Because they kept the higher prices.
Yeah, nominal growth this year it goes to 10. Next year is probably going to be 3%. It's a big decline in nominal growth. And normally, you know, when you have inflation, companies that can pass on their costs to the consumer. It's going to be much more difficult going forward.
So it raises the question about what investors are to do in an environment like this. What do you recommend?
I know it's a difficult call, and we have been wrong a few times on this, but I'm afraid that we cannot consider. You need to look at emerging markets. You have a peak in the dollar. You have a peak probably in US rates. Valuation is attractive, but what is also very important is that when you look at China, you know, China has done almost everything wrong in the last couple of years. But the thing that because they did a lot of things wrong, especially on COVID, now they're in this kind of strange position. They will be so lagging in getting out of COVID that you're going to see reopening. And I think the market smells that, and I think they're right, that the reopening of China is inevitable. And when there is a reopening, there is pent-up demand. We have seen that in Europe and the US, and this, I think, would surprise, I think, everyone, I think, how China can stick on this reopening path.
We've definitely seen it in the ADRs that trade in the United States. I mean, they have been on a tear over the last couple of weeks. And mind you, again, as you reminded us before we got started, they've also been beaten down. So you have to have some perspective of kind of where they're coming from. But I do think about the import of what happens in China and what that means for the global economy. Is that the big if factor for 2023?
Well, I'm surprised, obviously, I meet a lot of clients that it doesn't seem to be a big concern. And I don't know...
Big concern that the Chinese growth or what?
No, I think that China, again, I mean a lot of clients, and very few clients have asked me about China. And I don't know, maybe it's because they consider China uninvestable, so something that is not actually, but China, as you said, China accounts for between 20 or 30% of global growth in the last decade, so it's not irrelevant. The good news is that this year has been very weak, so next year should be better. And that's the positive aspect. The negative is on inflation, because if China recovers, then there is more demand, and then what happens to, for example, to energy prices? So it's also not obvious in a way that the Chinese recovery is going to be positive for global growth, because yes, for growth, but potentially negative for inflation.
So, okay, you had a question, Carol.
Well, if you had to make one bet right now, new money, investor comes to you, whether it's institutional or what have you, and you say, all right, here's what I would bank on for 2023. What would it be?
Well, we have basically two major calls here, which is basically investment-grade corporate bonds in the U.S.
Okay.
And second,
because balance sheets are very healthy, a lot of them.
You have a kind of a good kind of valuation.
Some decent yield.
And let's not forget, we expect bond yields to trend down in the U.S. next year. And then have a look at emerging market, but equities and bonds. I have to say emerging market bonds look even more attractive to us.
So very briefly, 30 seconds. At what point does the Fed cut rates because of growth concerns?
I think not before the end of next year.
Okay.
You're not worried about emerging market debt and exposure?
No, I don't think so, because if the dollar peaks and interest rates are falling, as I expect, I think the war should be behind us in terms of, we've already seen some small countries going into the trouble, but if the big ones are okay, I think we shouldn't have any big issue.
MSCI Emerging Markets Index down about 20% so far. MSCI World Index is down about 17%. Almost on par. We got to run. Have a good holiday. Good to have you here.
Thank
Luca
you.
Paolini. He is Chief Strategist at Pictet Asset Management, joining us here in our Bloomberg Interactive Brokers studio. Shortly, we're going to head over to our TV colleagues, talk about the market trade, count you down, wrap up the week in trading.
8:53 on Wall Street. Charlie Pellet along with some of today's company headlines. Chipmaker Broadcom out with an upbeat sales forecast. Stock is higher as the rest of the market sells off. Broadcom right now up by 2.6%. It does indicate that demand remains strong from corporate customers and the data center industry. Reuters, meanwhile, is reporting that Broadcom is facing an EU antitrust probe over the VMware acquisition. Again, shares of Broadcom up 2.6%. Lululemon Athletica shares are plunging down 12.9%. They're falling the most since the start of the pandemic after lower than expected profitability raised concerns about a pileup of inventory, and the yoga wear maker's full-year sales forecast disappointed Wall Street. Lululemon down now by 12.9%. China this week said it will be changing its COVID control policies. That's welcome news to automakers, specifically Mercedes-Benz. Ola Kalinius is the CEO, and he spoke this morning with Bloomberg Radio.
The central government has now clearly communicated that they want to ease up the situation. So what's going to happen? Are we going to see a stop and go, or are we going to see a gradual easing? It's difficult to say, but how that plays out will definitely define what the biggest market for us is going to do. But hiding beneath that has been generally a little bit weaker Chinese economy than we have been used to.
Sources tell Bloomberg TC Energy is planning to restart one leg of the shuttered Keystone oil pipeline beginning tomorrow. TC Energy down 0.8%. Those are some of the stories we're following. I'm Charlie Pellet.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on this Friday, getting ready to wrap up that trading day, wrap up the trading week, and we're seeing some negative tones heading into the week as stocks really move to their lows or near their lows or just off their lows of the session. So, we're waiting for some big stuff next week.
I mean, I think what's interesting to me is that, for most of the day, stocks were just kind of treading water.
Mm-hmm.
It was a really choppy day.
It's quite,
lacking
I think
for direction.
volume's been down.
Volume is down, yeah. Change in the last 20 days is down 9% for the S&P 500. You're right about that, Carol.
Yeah.
But now we're actually seeing a little conviction into the close, like down 0.7% on the S&P.
And what's interesting, I feel like, was that I think last week we saw buying into the close. I mean, we've seen some buying into the close even on the the Friday ahead of a weekend, which to me is always to some extent a positive indicator. And so that's not what we're seeing. And maybe there's fears that the Fed is going to come out and say, "Listen, folks, we are on a tear."
They're tear in what way?
They're going to say they're going to continue to raise rates. Do we get that 50 basis points, which is what I think largely folks were expecting after kind of, I feel like, the dovish Jay Powell conversation.
Like, how many times do you have to be, fool me? What's the
fool me once, shame on.
Yeah, but
you,
like we're
fool
like
me twice, shame on me.
Yeah, something like that. I don't know what it is.
They're data dependent, folks. They're gonna watch the data points.
But it's like investors are just so optimistic to latch onto some good news that it seems like they get ahead of themselves.
Well, and I think there's expectations that the Fed is coming to the end of the aggressive rate moves, and maybe while they aren't necessarily thinking about rate cuts, although Gina Martin Adams, remember, was it a week ago or last week, talked about it with us.
But Luca Paolino just now saying not till the end of 23.
It's hard to say what's going to be next year. A recession likely. Is it going to be tough? Many say no, but what does it mean? And I'm going to just continue to watch the labor market and whether consumers continue spending. We'll see what this holiday shopping season feels like.
What does it feel like so far to you?
I don't know. I've not done a lot of shopping, just very little.
I haven't done anything yet.
Black Friday, I went into stores but didn't buy anything.
We haven't done anything. This weekend, it's on my to-do list.
On your to-do
We'll see how much prices for things have gone up because Amanda Agati is going to be joining us in a few minutes.
12 days of Christmas, folks. It's those ladies dancing, man. They're always expensive. Or maybe it's the Lords of Milky.
I think it's the rings.
It's the golden rings. Okay, coming up, we're just we're hovering near our lows of the session on the equity trade. We're heading over to our TV colleagues. Beyond the Bell, our cross-platform coverage. We're counting you down to the close on this Friday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bossick, Katie Greifeld, counting you down to the closing bell, here to help take us Beyond the Bell. It's a global simulcast. We're joined right now by Tim Stenovic, Carol Master also here as well. We welcome our audiences across Bloomberg Television, Radio, Quick Take, as well as on YouTube. Carol, what do you make of what we saw really this week? Because I think the price action today, really kind of an anomaly.
Yeah, I agree. I think you kind of have to cross it off. Take a look in terms of what we've seen, some major declines for your major equity averages. I mean, the S&P 500 on track for more than a 3% decline, almost 4% lower when you look at the NASDAQ specifically. So a negative tone as we get ready for that last Fed meeting next week.
It is notable, though, to see some selling into the close. I mean, you know, we're actually seeing a bit of conviction on a day when we haven't seen any. Still, volumes are lower. We just spoke to Luca Paolini, who said that a recession is inevitable. He's chief strategist over at Pictet Asset Management. He says, though, that the recession, and look, everybody has said this we've spoken to, they're not concerned about a deep recession. They're not concerned about a sharp recession. They're concerned about a mild recession.
It's not deep if you keep your job. If you lose your job, it's deep.
It's a depression if you lose your job. That's what the saying is, right? He says, though, the bigger risk is stagnation, and that could be worse for markets.
Well, the Bank of America house call is for a mild recession next year. You look at some of the markets, not too much signs of panic, except maybe in the Treasury market when you think about that big bond rally.
I do want to, though, I mean, to Tim's point, though, too, I mean, Bloomberg Intelligence, I think, did a great study where they kind of looked back all the way to 1929 and sort of looked at the link between sort of the length of these recessions and how long it takes for the market to actually recover and basically hit to those previous highs. And it gets to the idea about stagnation. If that is the story going forward here, there's not really a lot of hope for markets to get back to those 4,000 plus levels that we saw earlier this year. As for today here, let's walk you through the numbers. An interesting day and an interesting week for the markets, with the Dow Jones Industrial Average down 0.9% on a daily basis, down about 3% on the week. The S&P 500 lower by 0.7% on the day, 3% on the week, and the Nasdaq Composite down 0.7% on the day, 4% on the week. The Russell 2000, that's your relative underperformer, down 1.2%.
All right, Romain, and if I take a look at the S&P 500, most names, or the majority of names, lower in today's session, 383 to be exact. And then if I look at the NASDAQ 100, again, almost 80 names were lower, Katie, 20 showing some gains. So really a risk-off trade throughout.
Well, if you look at the industry groups, there's a lot of red on this screen. A lot of that came actually just in the last hour or so when we saw the S&P 500 hit its session lows. If you look at what's doing well, though, you have autos up there. A lot of that is Tesla. First up day this week, dragging up the whole industry group as a result. You look down at the bottom, it's no surprise, it's energy. It's been the biggest loser every single day this week. 7th straight day of losses, Carol, longest streak since 2018.
All right, so let's get to some of the gainers. They're not as up as they were earlier in this session. I talked about Netflix earlier because it's been on quite a tear over the last 6 months. I mean, it's up 95% since the June 14th low of this year. Netflix up another 3% in today's session. You had a couple of upgrades. You had both Cowen and you also had Wells Fargo upgrading the name, upping their price targets. Cowen specifically, though, naming Netflix as its top large cap stock pick for 2023. Costco also among the gainers, although it was up as much as just shy of 2% earlier in the session, finishing with about a 0.3% gain. It's kind of been a wacky day for this one. It's been all over the place because it was down more than 2% earlier. Analysts did cut their price targets on the stock after the company earnings per share for the first quarter missed estimates. Brokers, though, coming out and saying that Costco performed as expected during the quarter. It might, though, not be enough to push shares higher. So a little bit of a mixed thing, but nonetheless, slight gain on Costco by the close today. And then DocuSign. Romain, you were breaking down those results after the close. Stock was up as much as 17% earlier in the session. It was among the top names in the NASDAQ 100, finishing with about a 12% gain, still down around 70%, excuse me, in 2022. The company did report third quarter billings that were stronger than expected. Piper Sandler coming out and upgrading the stock. So this was certainly a standout in today's session, Tim.
All right, we got some standouts for decliners as well, starting with Amazon. Another down day for the company. Down, it's only 3.4% from its October lows, which was its lowest since 2020, so not far from those recent lows. No catalyst today except for perhaps concerns that we could have higher rates for longer. Shares are down, remain more than 50% 50% from their 2021 highs. Lululemon down 13% today. It fell the most since 2020 after lower than expected profitability raised concerns about that pile up in inventory that we talked about a little earlier. Company's full year sales forecast also disappointed Wall Street. And then Schlumberger. Katie, you hit on oil and oil services. I mean, energy, the worst performer in the S&P 500 today. It's just been on a decline for the last 7. Schlumberger, the worst performer in the S&P 500 on a percentage basis. The oil services provider having its worst day in more than 2 months, Romain.
All right, a wild day, though, right now that we've been seeing in the debt markets here. A 30-year yield finishing out the day up about 13 basis points and pretty much just as severe on that 20-year. Interesting to see all the selling on the longer end of the curve here, particularly when you put it up against what we're seeing on the shorter end of the curve. Only up about 3 basis points on a 2-year and about 9.5 basis points on a 10-year here. That's the day. When you put the net effect here on a weekly basis, we're pretty much unchanged. In fact, that 30-year, we were at something like 3.5, 3.54. Last Friday, we're at 3.56 now here. What does that all mean? Really not much. We're kind of basically where we've been now for the last couple of weeks. Does that change next week, guys, when we get to that big economic data with CPI, retail sales, and, of course, the Fed decision and press conference on Wednesday?
I do think, Romain, like what's interesting is because we have so much mixed economic data, right? Consumer sentiment holding up. You've got short-term inflation expectations dropping to the lowest level in more than a year. You've got kind of mixed data points continuing to come at us pretty regularly. So what does the Fed focus on? Do they focus on the labor market? Do they focus on, PPI and then, of course, what we get from CPI next week? What is it that they continue to kind of throw at us in a big way and that maybe, affects the investor psyche that's out there?
I certainly don't think they can ignore PPI. They can't ignore what we saw out of the ISM reports earlier this week or that super hot jobs print we got last week. But the fact that you did see those University of Michigan inflation expectations come down a bit or basically stay where they were, that has to be a win for the Fed when you think about how concerned they are about expectations becoming unanchored, even though we're dealing with the hottest inflation, I don't know, in 40 years. That's a small win.
I think it's more than a small win. I mean, look at what happened, earlier this year when it came to the data point that we got and the way that the Fed latched onto that as a point of contention, a point of concern. And Romain, we know the way that sentiment drives consumer behavior. It's really important to see that. And I think we can thank that, gas prices for coming down for a big part of that.
Yeah, absolutely. That's definitely come down. But the question is, do they go back up? And there were a lot of signs in that PPI report of a reacceleration. We should point out here, next week isn't just about the Fed. We get, of course, Bank of England, more importantly, ECB. I think, at least from a global level, a lot of people are going to be watching to see what we hear from the heads of those central banks for some clues as to global economic conditions. And I know we focus so much on the U.S. for obvious reasons, but that feeds in to Jay Powell's and the rest of the committee's thinking.
I love that you went there because we talked so much about China. We certainly did on our air today. We're watching it so closely because if the Chinese economy picks up some momentum because of this pushback or pullback, if you will, on COVID-0. Katie, you have to wonder, okay, so what does that mean then for some of the commodity markets out there? We've seen commodities come way off their high levels. What does it mean for the energy market? So if China starts to put some more pressures on the global economy, picks up momentum, does global inflation pick up again?
Well, I mean, obviously what China does, that reopening story has to be an input into the Fed, or you would think it has to be. But what I'm really curious to see next year is whether we see some of these developed market central banks move out of lockstep. If Europe falls into a recession, for example, but the U.S. hasn't yet entered a downturn, could we be in a situation where the Fed is continuing to tighten policy while some of the other big economies stop?
Yes.
Perhaps one of the reasons Luca Paolini from Pictet just told us that, and he had the caveat, he's been wrong before about this, but EM, emerging markets, that's where he's still telling clients to go.
Well, we should point out, I mean, the outperformer on the week on a global basis was EM stocks, pretty much led by that big jump that we saw in Chinese stocks. Of course, they have an outsized influence. But here's a pop quiz for you, Carol. Best performing market globally this week. Major market, I should say.
Dun, 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 dun.
Well,
is it the U.S. market?
I'll save you. China was number 2, so that I know you were probably going to say China. It's not China. It was actually Egypt, believe it or not.
Oh, I would have not gotten
really?
that.
I don't even know what function that is.
But
I don't even think that's fair.
It's all fair.
No, it's not.
It's all fair. It's a Bloomberg terminal, Carol.
It's not fair. I mean, it's right, but it's not fair.
Good quiz question.
All right, guys, have a good and safe weekend. We got to do.
Did you see I was number 2 on the quiz this week?
It was a tough quiz this week. I went anonymous.
I put the quiz together, by the way.
Did you?
You don't take it. They do not pay me, so please go to Quiz Go.
I haven't done it yet. Yeah, when Tim doesn't do
Really
well,
hard.
he goes anonymous.
Yeah,
Can you believe
you're
it?
not top 20. You got to go
Just put a few
anonymous.
coins in her Patreon. Once in a while.
All right, I'm going to do it after our show. All right, guys, have a great weekend. Stay safe. All right, we'll see you again. Our cross-platform coverage, Beyond the Bell, we call it, on radio, TV, YouTube, and of course on Bloomberg Quick Take. We will see you again, same time, same place, on Monday. 12 Days of Christmas. Are we there yet?
No, we're not there. You
Oh,
still
we're
have time
getting
to shop.
All right, so 12 Days of Christmas. Love singing it. I used to love singing it with my siblings growing up.
Okay, go ahead. You got a microphone in front of you.
No. But I do wonder what they're going to cost this year. And from what I'm hearing, more than in years past.
And those higher prices can really impact people's holiday spending patterns. To help us stay conscious of our holiday budgets, back with us for our annual check on the cost of the 12 Days of Christmas, we've got the Chief Investment Officer of PNC Asset Management Group, Amanda Agati, back with us. She's on the phone from Philadelphia. Amanda, it's good to have you with us. I was talking to Carol this morning when we knew we were going to have you on the program again, and I said to her, it's my third time getting to do this with Amanda. It's nice having you back. It's something that we certainly look forward to each year, even though you do join us throughout the year to talk about the markets. We're talking 12 Days of Christmas here. How ugly is it going to be this year? We know inflation has been at 40-year
Can I not buy those 5 golden rings?
You're not going to be able to buy
Do I have to cut
those.
something off the list?
Well, it's definitely going to be a doozy of a year. I'm delighted to be back with you to talk about this. This is always such a fun analysis and project that we do every year. But I got bad news for you. It's going to cost you to buy all 12 days worth of True Love gifts from the classic holiday song. It's up 10.5% year over year, way far ahead of inflationary trends in the broader economy.
What blows my mind, it's the third highest year-over-year increase in the index's history. Was it more expensive? Was the gain more last year?
Last year was a pretty sizable year, but not as big as what we've seen in the past. The biggest increase year over year was all the way back in 2003. Second biggest increase was in 2008. So we got pretty darn close to the second biggest with this year.
$45,523.27. That's how much it's going to cost you
To buy the 12 Days of Christmas.
Yeah. Why?
That's
Why?
right.
What is
Unless
the?
you want to do the cumulative version, really want to make an impression on your love this holiday season, it's going to be $197,000. So
Wow.
it doesn't make the
Wait, what's-
45,000 sound all that.
Hold on. What's the difference between those?
Yeah.
Oh, I see what you're saying. That's like
So
a.
if you repeat the verses in the song, it ends up being 364 gifts. So we always
yeah.
do the math on that.
Not doing
and
that.
It's a little over 197,000.
That's like an SAT question,
It's
so I'm not going to go there.
It's like, love you, honey, but not that much. All right, so what costs the most? Give us an idea. Walk us through some of the highlights.
Well, much to my chagrin, my all-time favorite gift is up the most. It's the single biggest mover year over year, and that's, of course, the 5 golden rings. They're up a whopping 39% year over year. And what's interesting about this one is that even though the spot price of gold is down, year to date, we're still seeing the gold rings be the biggest mover. And it really reinforces trends in the broader services economy. We're seeing really strong premiums and pricing power, especially when it comes to jewelry making. So that's the big one. But the birds are also a big mover again this year, just like last year.
All right, before we get to the
Wait,
birds.
you're talking about the turtle doves or the French hens or the geese? All of them.
I like to describe them as the exotic pet categories. It's really the collection of all of the birds with the exception
Those
of
are not, just so you know, those are not all being used as pets. I don't want to burst anyone's bubble here, but.
It's in air quotes. They're also being
Okay.
used
Oh, there's the partridge, the
farm
calling,
to
right? The swans. Gosh, I forgot a few. There's a lot there.
What about when it
There's
comes
a whole
to.
bunch of birds. yeah.
There are also some, you know what I do like about
Up 20%.
Carol.
I know. Well, I just want to get the
Okay.
number out for our audience, Tim.
Can I talk
care.
about
I
my
care.
favorite?
Yes, go.
I'm a big pears guy.
You are.
Yeah, and they're good in the winter. But this index shows us that fertilizer costs have just destroyed any hope of, affordability when it comes to those pear trees. What's going on there?
I always joke that I'm much more of a peach gal myself. So from a
Well, you got to get a summer version of this, Amanda.
Yeah, Yeah, exactly. Like, I don't really feel like paying up 28% year over year for a pear tree. That's not really what drives me. That's not at the top of my Christmas wish list. But you're absolutely right. It is definitely the cost of raising the trees, and certainly fertilizer prices are a key input there. It's not really a demand-driven story. It's much more the input cost component that's driving it.
It's got to be the potash. That's what I'm thinking. No, what about if I go, I don't know, in terms of how I acquire it, if I go the e-commerce route, does that make it cheaper?
So it does make it a little bit cheaper, but it's not really going to give you that much of a reprieve. So on a year-over-year basis, we're looking at about an 8.9% increase. And a couple of things there that very much tie to what we're seeing in the broader economy. So continued supply chain disruptions, definitely the cost of specialty packaging, handling, and care that goes with transporting all of this precious cargo, fuel costs for sure, swings in fuel prices affecting shipping costs in a big way. And despite many of our pleas to Amazon Prime and others, free shipping is not available for livestock purchases. So it's definitely going to cost you.
So
Not yet.
I want to say one of the things that we keep talking about when we're looking at the economy is that people are out, they want to experience things. So like 10 Lords of Leaping or 11 Pipers Piping or 12 Drummers Drumming. We're all into the experience. Are they more expensive?
They definitely are. They are definitely moving quite a bit on a year-over-year basis. And the weight of the services and the overall Christmas price index have risen as the shift in the underlying economy has taken hold over the last number of years. So we're definitely seeing services inflation in the Christmas price index higher than goods inflation. When we look at the collection of performers, we're up about 14.5%. versus the goods increasing at just 4.2%. So a really big distinction there and totally in alignment with consumer behavior shifting from goods to services and experiences this holiday season.
Mind you, if you can get a ticket to the show, I mean, if it's something like Taylor, Swift, forget it. You can't go see those Lords
Or
of
one of
Leaping.
those new Broadway shows that you just can't get tickets to.
It's just tough.
Amanda, take me back to last year when we were having this conversation. What was the conversation we were having? I actually don't remember how much prices had gone up by this point.
A lot of eggnog was involved, and that's why he doesn't remember.
Exactly.
Well, last year was a very interesting year because if you recall in 2020, the version of the Christmas price index looked very, very different because we had to shut the lights off on all of the live performances. And so flipping the lights back on in alignment with the reopening of the economy really drove significant moves in a lot of those live performer categories on a year-over-year basis. So that was really more of the story for 2021 relative to the prior year. Thankfully, we're getting to some semblance of normalcy, even though we're nowhere near pre-pandemic normals. And so those comparisons on a year-over-year basis, even though they're running hot, are still a little bit more in alignment with the trends that we're seeing in the broader economy.
Yeah, it was interesting. I was listening to Surveillance, and they were talking about, how, and we talked about it earlier, about just everybody was obsessed with coming down with Omicron, like as we headed into last year's holiday season.
Yeah, there were a lot of canceled plans as a result.
Right? So it's just a very different tone. We have fun with you, Amanda, when you come on and talk about the cost of the 12 days of Christmas year to year. What does it maybe give you in terms of clues about what's going on in our economy?
Well, it always seems like a fun and fantasy type of analysis, but we do very much try to tie to what we're seeing in terms of broader trends for the economy. And I would say this, above many of the other analyses that we do, is always focused on consumer behavior and underlying health of the consumer. Of course, this is a unique specialty gift basket of goods and services, but I think there's still some pretty strong trends as it relates to the underlying health of the consumer and also what the consumer is facing potentially in terms of headwinds. And so with 70% of U.S. GDP tied to consumption in some way, shape, or form, we really want to be focused on consumer health. It's a critical driver for the markets and the economy. And so our view is U.S. consumers continue to hang in there despite many macro headwinds. But again, as we said before, there's a lot of behavioral shifts under the surface from goods to services and experiences, but they haven't stopped spending, and that's the good news so far.
Amanda, 10 seconds. We're doing this a year from now. What is the PNC CPI?
Well, I hope that it is certainly not a 10.5% increase. I hope that we revert to longer-term trends in alignment with what the Fed's long-term target is for CPI. I think everybody would be much happier to talk about a 2 or 3 or even 4%, even though that's a little high long-term target increase year over year. So we'll see.
Amanda, have a great holiday. Amanda Gotti, Chief Investment Officer at PNC Asset Management Group. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A late-day slide in equity shattered the calm that prevailed throughout most of the trading session. The damage really done in the final 30 minutes of trading. The Dow, the S&P, and NASDAQ all declined as stock traders took risk off the table. S&P today down 29, ending the week, heading into the weekend at 39.34, a drop of 0.7%. Dow Industrials down 305, lower by 0.9%. NASDAQ Composite Index lower today by 77 points, a drop there of 0.7%. 10-year yield 3.58%, with the 2-year yielding 4.34%. Gold, spot gold down $7 the ounce to $17.96, ending the week just below $1,800. Up today by 0.4%. To be clear, gold was up today by $7 the ounce, again at $17.96, while West Texas Intermediate crude little changed, up 0.1%, $71.53 a barrel. Lululemon Athletica shares fell the most since the start of the pandemic after lower than expected profitability raised concerns about a pileup of inventory. Lulu today down by 12.9%. Again, recapping late day sell-off here. Final 30 minutes of trading, we had the S&P down by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Americans shipping more than 50 million packages last holiday season with the U.S. Postal Service. We're just talking about the USPS. And with package volumes continuing to increase with the rise of online shopping, this holiday season, the USPS is preparing for an even higher volume of packages.
All right, so
lots of stuff.
How are we going to make sense of this? We got Melissa Foreman. She's president at Triumph Pay. It's joining us via Zoom from Dallas, Texas. It's a payment platform. What it does is it connects brokers, shippers, carriers, and it's a division of TBK Bank, member FDIC, and part of the publicly traded Triumph Financial. They've got about a $1.3 billion market cap. Melissa, good to have you with us this afternoon. We like talking to people like you because you have real-time data. You have such a good understanding of what's happening within the industry right now. We've heard so much this year and last year, too, about the shortage of drivers, the increase in demand. What's the lay of the land right now?
Yeah, thank you, Carol and Tim, for having us on. And yeah, so Triumph Pay, we're uniquely positioned given where we sit within the transaction flow of payments to really have a good understanding of what drivers and carriers are experiencing in the industry. And so Triumph Pay makes about $24 billion annualized payments to carriers per year. And that's the most of anybody in the industry. And so in doing that, it gives us that unique view. And we recently did a survey of our drivers that we're paying. And what's happening right now is truly unprecedented. You know, when you look at the full truckload market, as your previous caller mentioned, you know, consumer spending is shifting from products to services. And so what does that mean on the transportation industry? It means that the trucks, you know, aren't getting full. The inventories are high in all of the retail chains that are out there. And so they're just not restocking all of that. When we talked to our drivers out there, they said, you know, 80% of them indicated that their revenues in 22 were down from 21. And while 22 started strong in the freight market, we've seen, you know, on the spot side of that, in the last, you know, 2 quarters, a significant cliff where it's fallen off. And, you know, 55% of those guys out there are saying, guys and gals, that spot rates are their number one concern. And you have to ask yourself why. Why does that matter? You know, spot rates aren't lower than they were a few years ago. They still would seem healthy in comparison to previous years. But what's changed over the pandemic and COVID and the supply chain issues that we've had over the last couple of years is that inflation has increased. The cost of their equipment, fuel prices are at record highs for diesel. And so when you compound that with the rising interest rates, their cost to operate has skyrocketed. And so what would have been a healthy level a couple of years ago is now in many cases where carriers are taking on freight where they're hauling that load at a loss. What's even more pressing about that is that they have to do that and front all the expenses to be able to pay for the fuel, pay for the drivers, you know, settlements, pay for the equipment and insurance. And they're doing that up front, but yet they have to wait 30 to 60 days to get paid. And so it just further compresses them and puts them in a position where they're just being squeezed out of the market. It's really hard for them to operate right now.
Melissa, help me understand what goes on in the trucking market. I know people who've owned their own cabs, right? And they, I guess, do their own thing. But is it largely kind of like individual owners of trucks, or is it a lot of larger companies that have their own trucker base? Yeah, if you could explain some of the dynamics of the industry.
Sure, Carol, that's a great question. And if you look at the truckload over-the-road market for hire, about 85% to 90% of trucking companies are 5 trucks or less. So they are small businesses living the American dream, trying to build, you know, their businesses and yet they have all this upfront expense and these pressures that are squeezing out their margins.
Well, is it any different though from anyone else who either has to get in a car to head to work or has to buy clothes to go to work? Like, tell me, is it not just kind of the same that everybody's facing right now? And it's companies are trying to figure out the balance between raising wages, right, to meet what's going on with the inflation pressures. And we talk a lot about wage inflation. Wages have gone up a lot. But, you know, what's the balance? Because if you raise the costs, the wages too much and everything gets too expensive, you do wonder if people are going to slow down on demand for those in the trucking industry.
That's right. And so it is quite similar. However, it trails what consumers do a little bit longer. And so because of the cost to acquire that equipment, you have these assets, and you know these carriers are fighting hard to keep them on the road and to keep them profitable. You can't just say one day, I'm going to take a different job where I make more money. You've got an expense that you have to handle and either offload or take a loss. And so they are working as hard as they can to be able to stay in the business, stay on the road, keep their trucks moving, but doing so in a profitable way, because you can only take a loss for so long before you either get bought, right? You sell off your company, or you've lost everything that you've built. And so they tend to stay in a little bit longer, and those that make it through survive, because we know that transportation is cyclical. And what happens is, you know, you have this pressure, and this happens, you know, every few years, where you start seeing, you know, capacity start to come out of the market, which will rebalance. But again, it's lagging. And so to get that capacity back in the market is also lagging. And so as, you know, we look forward to probably end of 23 or even beyond, when things start to stabilize a little bit and consumer spending shifts back to products, we've got to make sure that those carriers are there and that the drivers are there and able to haul that freight for us, or we'll be in a similar situation that we ran into at the beginning of COVID, where there just was no capacity and back in a significant driver shortage situation.
Melissa, I have an existential question about the industry. For a decade, we've been hearing about automation in the context of driverless trucks.
Yeah, good question.
You're laughing. Right. You're laughing, and it's interesting. I mean, I remember being at a dinner with a Silicon Valley friend who was early at one of the Silicon Valley firms, and he said, we are going to see a revolution in trucking. And this was more than 5 years ago because of driverless trucks. We haven't seen them yet. Are we going to see them on a large scale anytime soon?
No, there is certainly some efficiencies you can gain, and there's some applications for it. But, you know, if we haven't mastered how to get a car to be driverless on the road, it's really hard to do that with a long haul truck, right? It's a 52-foot trailer, and, you know, you've got a lot of weight going down the road and a lot of decisions that have to be made by that driver. And certainly, you know, highway runs where, you know, point to point on the highway, you know, you'll start seeing some applications maybe there, but at some point that truck has to get off the highway and they have to navigate the city. And there's just so many unknowns. It's going to be a while before we see that take on any significant amount of driving.
Hey, Melissa, what do truckers get paid?
Oh, it depends. So right now, if you look at spot rates, it's around $1.86 per mile. And that is, you know, that's all in, or $2 a mile. That's all in. They have to pay for their truck, their fuel. Most trucks are running around, you know, 5 to 8, maybe 9 if they're brand new miles per gallon. And so they're not the most efficient vehicles out there. So it's their margins are you know, anywhere from, you know, 8 to 12, maybe 15% on the high end in a good market. And that's without the higher inflation and costs of their equipment and their financing to get that equipment that has gone up recently.
What are the rules in place to prevent drivers from driving long hours so they don't get too tired? If this incentive system is in place that actually, you know, pays people per mile?
Yeah, absolutely. So FMCSA has hours of service regulations that are in place. All drivers, certainly those that cross border and run outside of a 100-mile radius, adhere to standards. And they have electronic logs that keep track of every minute of their day. So they have to log when they're resting, they have to log when they're sleeping, they have to log when they're on duty, off duty, not driving. Every part of their day is tracked, and the formulas will tell them how much they can drive today. And so when you think about, the driver shortage, a big part of that came from, implementing the electronic logging of those, which held drivers accountable to not being able to go over their hours.
Right.
And so when you go ahead.
No. We unfortunately have to wrap up, but I hope we can check in with you again in the new year, because this was really informative. I don't feel like we don't always get into the nitty gritty when it comes to the trucking industry. We go from the really kind of sky high level, but this was really informative. Melissa, thank you. Melissa Foreman, president of Triumph Pay, joining us via Zoom from Dallas, Texas.
Let's get to world and national news. Nancy Lyons is standing by in our 99.1 newsroom. Hey, Nance.
Thanks, Tim. U.S. producer prices overshot expectations in November, underscoring that the Fed still has a way to go to check inflation. But consumer spending continues to buoy the economy.
Consumers are looking at price tags and discounts as they do their holiday shopping. Michelle Meyer, chief economist of the MasterCard Economic Institute, said in a Bloomberg interview.
In this holiday shopping season, consumers are more promotional based. We saw this big surge of activity into the Black Friday period, particularly for things like apparel, which was really, really strong. So I think consumers are cognizant of how they're spending, where they're spending, what they're spending on.
Meyer said consumers are carefully navigating the headwinds they see, both inflation and higher borrowing costs. In Washington, Irv Chapman, Bloomberg Radio.
FTX founder Sam Bankman-Fried says he is willing to testify on Capitol Hill next week about his failed crypto exchange. In a tweet today, Bankman-Fried said he does not have access to much of the data, so his testimony will be somewhat limited. Just when Democrats thought they had a comfortable majority with the runoff win earlier this week in Georgia, they're now hearing Senator Kyrsten Sinema of Arizona is switching from Democrat to independent. Bloomberg's Washington correspondent Joe Matthews says it may not be a deal breaker.
Kyrsten Sinema has been a real thorn in the side of a lot of Democrats in her reluctance to raise taxes, in her reluctance to end the filibuster in the Senate. And that's why a lot of the Democratic agenda, Joe Biden's agenda, like Build Back Better, never got passed. So this may not change as much as the headline might imply.
Bloomberg's Joe Matthew. At the World Cup, Brazil with standout Neymar was eliminated today by Croatia. Argentina and the Netherlands are tied and are now in extra time. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A wave of late-day selling at the very end of the week that saw recession fears resurface and a hotter-than-estimated inflation reading only a few days before the Federal Reserve decision. Luca Paolini is Chief Market Strategist at Pictet Asset Management. He was our guest right here on Bloomberg Markets.
So I think the question really is if inflation is going to fall enough for central banks to reverse their policy. I don't think so, for a very simple reason. They made a mistake before. And the worst they can do is to ease too early. And then the risk is that they will lose their credibility.
And we saw stock selling intensify. Really, in the final 30 minutes of trading, S&P ended down 29 points at 3,934, a drop today of 0.7%. S&P year-to-date, only days to go before we wrap up the trading year. We've got the S&P down 17.4%. The Dow today down 305, down 0.9%. NASDAQ today down 77 points, a drop there of 0.7%. For the week, by the way, the S&P was down 3.4%. 10-year yield 3.58%. Spot gold up $7 the ounce to $17.97, up 0.4%. West Texas Intermediate crude little changed, up less than 0.1% today. WTI at $71.50 a barrel. After earnings, Broadcom up by 2.6% today. Lululemon shares after earnings plunged by 12.9%. Bank of America's CEO Brian Moynihan says he has no intention in leaving his post, responding to a report that he is on the Biden administration's shortlist to replace Treasury Secretary Janet Yellen if she steps down. His remarks came during an interview on CNBC. Recapping, S&P down 29, down 0.7. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Just want to mention some Microsoft headlines crossing the Bloomberg terminal. Microsoft coming out and saying it can no longer comment on the Activision deal close date. A spokesman commenting on the date for the deal closing. It had previously said the deal would close by June 30th, but we talked earlier about this.
with Matt Day.
With Matt Day, and saying that with the FTC pushing back on Microsoft's plan to acquire Activision, you're talking about litigation and stuff that's easily going to go on for about a year or so.
Perhaps makes sense they would make an announcement like this at 4:40 on a Friday afternoon when the market's closed.
The stock in the after hours, it's pretty much unchanged. All right, we want to shift gears. We talked earlier about all the packages that are going to be moving around this holiday season and the truckers that are going to be involved. But what about all of us and all the travelers and holiday revelers that are flying around during the last couple of weeks of the year and into the new year? So there's a lot going on up in the air.
Yes, and some of the activity up in the air is private jets. For more on what we're seeing, at least in the private aviation space, back with us, we got Andrew Collins. He's president and CEO of Sentient Jet. On flying private this holiday season, he's with us in our Bloomberg Interactive Brokers studio. Good to see you. We haven't seen you since the summer. How are you?
Yeah, doing great. Yeah, it's been busy. You guys have been busy, I'm sure, as well.
We have been busy. Are you busier in the holiday season than last year?
Yeah, so last year I would say that everybody was kind of reconciling with the idea that they could travel again. So we had a real demand surge that occurred last year, and I think the industry had to catch up to that. And so this year I feel like it's far more coordinated and it's a little more spiky. Last year's growth surge was unprecedented. This
Give us a number.
So you would have been like up 35, 40% in a market that usually would have been up 3 to 5%. So really aggressive.
It was just like the world's open, we can go places
exactly
for the first
right.
time, right? The holiday
Yeah,
season.
that's exactly right.
Although Tim and I were talking about like Omicron then, like put a little bit of a damper on
Maybe
that.
that's the reason not to fly through airports and instead fly private.
Did that help you? Is that what?
Absolutely. So that's one of the reasons that private saw like its addressable market kind of get a deeper penetration because of the pandemic, right? People were looking for less exposure. They were looking for more control. There was a lot of people that said, you know what, I've been, sitting inside or kind of quarantined for some period of time. I want to get out there.
Right.
So they saw it as a tool.
So Andrew, so then in comparison to last year, what's going on, the activity? Is it down from last year? And then also take us back to 2019 pre-COVID.
So we're up. I mean, I can speak to our company. We're up about 11% year over year on revenues. So I think that there's still the demand there. there, we'll probably see somewhere around $450 million or so in flying this year, about 80,000 passengers. So it's there. I would say that that's probably even with last year. So you saw this great, huge kind of en masse spike that happened last year. This year, as I said, it's a little more coordinated. It's spiky though. As you approach like Christmas, the shoulder days to Christmas, for example, will be the busiest days of the year.
What about when it comes to pilots and finding pilots? How tough has that been? I know it's been so tough for the airline industry as a whole.
So our parent company would have hired probably about 450 pilots this year.
FlexJet is your parent
our
company.
parent, yeah, thank you. 450 pilots this year, same next year. And you need a team, you need investment, you need coordination, you need differentiation, you need a lot. Because commercial right now is trying to pull on a lot of folks as well. It's a little cyclistic. I think it'll start to settle down a little bit, but
Can you get all the pilots you need and want?
yeah, we can. I mean, I don't know that everybody can. I think we can. I think you have to be in a position to compete both from a compensation standpoint.
And are you paying up more?
Oh, yeah. Yeah, significantly more.
We just talked to a person in the trucking industry who told us how much truckers make. How much do pilots make?
A pilot can make anywhere from $175,000 to $300,000+, depending. Plus, there's the benefits of that go along with it and such, and it's been increasing.
So there's obviously the top line coming in, and then there's the cost equation. What's happened with your cost over the past year?
So costs have gone up, and we've had to level set that with the consumer.
How much are they up?
So I would say about 25 to 30%.
That includes fuel?
So no, that doesn't include fuel. So loaded with fuel, you're probably a little bit more than that. And what that did was that, was the, notice to the consumer that it's expensive to fly privately. However, the demand still being there, the market will bear it and the consumer will pay it. But things like, the Ukraine conflict and such also drove up extra costs as well. So, but it definitely has increased.
Who's flying? I know we always ask you about your demographic, and I'm always curious about it. Remind us if things have changed.
Things have changed in the sense that you had people that maybe wouldn't have flown privately before the pandemic. They were a little more conservative, or they saw a sustainability piece or whatever it was. They're now in the mix. We're seeing both the combination of business and leisure. So right now, a big thing for us as a measurement is, how long someone goes, time of stay. And we're seeing almost an extra day on average when people go somewhere. So we think that's all about the flexibility that exists in the world right now, that you can do things virtually.
Are people doing work travel and then saying, I'm going to take my wife, or I'm going to take my husband, or take some family? Are you seeing that also happening?
No, you're seeing the combination.
Like leisure?
Leisure, for sure. Ways. Absolutely. That's exactly what you're seeing. And I think that's what I would attribute that extra almost day on average in different cities around the country.
The cost doesn't change per person; it's per hour.
No, it's just per hour. Okay. Yeah, it's per hour.
Does it make it more difficult for you to do like load management if people are staying in places for longer?
No, not with our model. Our model's highly efficient. The Sentient model is one where we go out into the Part 135 market to get aircraft, so we can move them around. Fixed assets would be a little harder, but no, it's not too bad.
We only have about a minute and a half left here.
Sure.
What's the future? Before we got going, we were talking about, you said one of the next big things are sustainable aviation fuels and eVTOLs. So tell us what's going on in that market, or how you're thinking about it and when it happens.
Absolutely. I think sustainability is very significant as we move forward. We're doing 300% emissions offsetting on each flight at no extra cost to our consumer. We've really invested in this. I think sustainable aviation fuel is coming. You're seeing it at a commercial level where there's investment. I think you'll start seeing that at the private level.
When?
At the private level, it's already really happening now.
Okay.
And then the other thing I would tell you is the march towards the eVTOLs, the electronic vertical takeoff and landing, the vehicles. We've invested in 200 for a commitment. And so we see that happening.
When do those get delivered to you?
So that's a good question. I would tell you that those are probably on a 5-year time frame from here.
Okay.
That's what you're going to start seeing eVTOL-like vehicles in the next year, but about 5 years.
You won't see me on one in the next year.
Really fascinating. Andrew, thank you so much. Have a great holiday season.
Absolutely. Happy holidays to both of you.
Always good to have you here, and especially in studio. Favorite plane to fly?
Challenger 300.
There you go. Andrew Collins, he's President and Chief Executive Officer of Sentient Jet, joining us here in our Bloomberg Interactive Broker Studio.
It's fun. I like talking planes.
Man, do you love planes. I told you, it's how we fix, when we're doing business travel.
Andrew, we'll take a ride together sometime. How's that? That sounds good.
TBD. All right, you're listening and watching Bloomberg Radio.
It's 4:53 on Wall Street. Charlie Pellet with a look at some of today's company headlines. Microsoft saying moments ago it can no longer comment on the Activision deal closing date. It had previously said the deal would close by summer. Sources tell Bloomberg TC Energy is planning to restart one leg of the shuttered Keystone oil pipeline beginning tomorrow. The company declared force majeure on shipments yesterday after a 14,000-barrel leak forced the line shut. That spill is on track to be one of the largest onshore crude disasters of the decade. Sources tell Bloomberg Juul Labs has agreed to pay $1.2 billion to resolve about 10,000 lawsuits targeting the e-cigarette maker as a major cause of a U.S. youth vaping epidemic. The accord, which has not yet been finalized, was announced earlier in the week, but an amount was not disclosed. Uber is suing the New York City Taxi and Limousine Commission to block an increase in rates that it has to pay drivers that was approved last month, calling them dramatic, unprecedented, and unsupported increases. Uber shares up today by 0.4%, rival Lyft up by 2.9%. American Airlines Group and JetBlue Airways plan to expand domestic and short-haul international flying next year under a much scrutinized operating partnership that is focused on the northeastern part of the United States. American Airlines down today by 0.5%, JetBlue lower by 0.7%. Those are company stories we're following this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Carol Masser. We're live in the Bloomberg Interactive Brokers studio in New York. From New York to Washington, D.C. we go for a check on the latest world and national news with Nancy Lyons in our 99.1 newsroom. Hey, Nance.
Thanks, Tim. Vladimir Putin says Russia may add the nuclear first strike to its military doctrine. His comments to reporters today came just days after the Russian president warned that the risk of atomic war is rising. Former U.S. Defense Secretary William Cohen tells Bloomberg Putin's comments are telling.
Well, his talk reflects his weakness. He is losing badly on the battlefield. If you look at what is taking place in Ukraine, his forces have been poorly trained, poorly led, poorly equipped, and they're being put into a meat grinder. So he is losing, and he knows he is losing. And so now he's upping the game, so to speak, by saying, well, I might consider using nuclear weapons.
Former U.S. Defense Secretary William Cohen. The White House is encouraging seniors to get the updated COVID-19 vaccine bivalent booster during the holiday season in order to stay protected against the virus. Dr. Anthony Fauci, the director of the National Institute of Allergy and Infectious Diseases, admits it's a new way of thinking from the usual vaccines for things like pneumonia and chickenpox.
Other vaccines of the other types give you immunity that's lasting in decades and sometimes a lifetime. Unfortunately, that's not the case with COVID. So we've got to keep up with that virus.
Fauci and the rest of the White House coronavirus team were taking questions from AARP members. For those of you flying this holiday season, the TSA is issuing a reminder you should travel with unwrapped gifts. Spokesperson Lisa Farbstein says if a wrapped package triggers an alarm, TSA officers will need to unwrap the gift to resolve the issue. Well, it has been a nail-biter. Argentina just defeated the Netherlands at the World Cup. They went to penalty kicks. And also today, Brazil and its star Neymar are out of the tournament, losing to Croatia. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nance, thank you so much. Nancy Lyons with World and National News. So this week on Bloomberg Television, Chief Future Officer featured the CFO and the CEO of Royal Caribbean. And so we wanted to include some on our Business Week weekend show. The Royal Caribbean CEO, Jason Liberty, and CFO Naftali Holtz from the Bloomberg TV Chief Future Officer special. We've got a little clip, and in it, they discuss how C-suite changes at the cruise line impacted both of them. Check it out.
We were still kind of coming out of the pandemic. We were still ramping up our fleet, ramping up our occupancy. And so we had to keep our eye on the ball on, because historically we would bring about 3 ships up a year.
Yeah.
And here we brought up 64 ships in a year.
Change.
It's a big change, a Herculean effort.
Helping the new CEO meet those challenges
new CFO, Naftali Holtz, who moved up from VP of Finance.
I had hired him, I think, about 6 months before the pandemic. Well, I was looking for somebody with a lot of really strong work ethic, somebody who was strategic, somebody who understood how to get things done inside of an organization. And I saw those qualities in Naftali, and he has done an exceptional job coming into the role. He hit the ground running.
That dynamic in the C-suite has helped Royal Caribbean's comeback maintain momentum.
What's it like becoming CFO, working for the individual who was CFO and is now CEO? What's that like?
I feel very fortunate because I have someone who has been in the job for many years, is still with the company. Obviously, he has much more responsibility, but he understands what it means to be in my job.
All right, that, of course, was Royal Caribbean CEO Jason Liberty and CFO Naftali Holtz. You can hear more of that interview on our Bloomberg Business Week weekend show tomorrow morning at 8 a.m. Wall Street time, or